Are you getting my voice clear? Is my voice clear? Please type in the comments, is my voice clear or not? Are you getting my voice? So, okay, so our first class is gonna be price actions. Now, first we may begin by asking what is a price action. In some scenarios, price action basically refers to trend lines. The question you asked me in the chat, how do you determine whether the price will go up or go down? You will know in this video soon, inshallah. But I have a few things to begin with. 1 minute chart is just used for entry points, whether you want to enter a trade now or later. 5 minutes is useless, 10 minutes useless, 15 minutes useless, 30 minutes can be used to determine very short-term trends. But if you want to do analysis and trade, it will be either from 1 hour or bigger frames. It's better to select 1 hour. Now, our first stage, first pair is Euro JPY. Okay, and if you focus carefully, you can see some trend is developing. For example, this is still short. We'll go for our chart. In this trend, let's just stay in this picture. You can see this is this trend going from here, and this is one trend going from here, and this is a gap. This gap is basically an event or any elections or some news took here, so that's why this gap occurred. First, we'll draw a trend line. To draw a trend line, you need to change the chart. There are majority of charts available, but the most common charts are this bar chart. The first one is bar chart, the second one is mountain chart, the third one is a candle chart, and the last one here, this is Japanese candlestick charts. So we are going to trade on this and on this. We'll select the line chart. This is a line chart to draw trend lines, because in line chart you cannot have empty sticks, empty wicks. We'll go here, we'll set the trend line. First trend we can observe here is a downtrend. Let's make a line and make sure you attach the line from the first touch, second touch, and third touch. Any other touches, let them go down. For example, look at this. Here the prices went down. You could have drawn from here till here, but no, you connect the first and the second touch. This touches and this touches, you don't care. The price of the downtrend is called bearish trend. The upside trend is called bullish trend. This from here till here is a bearish trend. From here till here is a bullish trend. We'll draw another trend line here. 1 second. Here, like this. We're gonna connect the first two till this majority line. Yeah, like that. You can observe here. I'm zooming a bit. The prices. Now we'll change the chart back to our candle chart. If you observe here, the prices broke above this trend line, but again came down. Okay, and it formed this double candles. This double candles, long candles, but no, you can say closed. They didn't closed fully. You can see there is still some this space left. This space is called wick, W-I-C-K. The space is called wick, W-I-C-K, and this is empty. Now if the wick empty from the downside, it will indicate there is a bullish power, there is a bullish momentum. Here first wick form and second wick form. If you see these type of patterns in any chart, it's called double bottom, and the next few candles will go up. It's a confirm. For example, look at this, and the prices went up. Okay, if you go here, you can see it's a downtrend clear. Let's zoom out a bit. Prices started from here, they continue till here, downtrend from 10th March till 25th April. People got to make a lot of money easily, but it continued a trend from here top, then touched the lowest trend line, then went up again, then came down again, then went up again, then again came down, broke below here. Like here, many people would have sold. Why? Because they might be thinking they can sell because the trend line, this is the trend line. If it breaks above, buy. If it breaks below, sell. But you need to get the confirmation. At this stage, this point, these candle bars were too much. And if you look at, if you zoom in, you can see these three bars. They are empty from top. Why? This is indicating that there is still some bullish power left in this. The candle has some bullish power. Okay, the candle have a bullish power left. So the next candle you see is green, and it's almost fully closed. So in this bar, these three bar bullish power released. So now there is no more bullish power left. Why? If you calculate this, and this gap, it will add up to this bar. But at this stage, again a red candle form. I sent you a picture on WhatsApp on the candlestick charts. If you look, this pattern is there, and the next, when this pattern form, prices go down, and you can see what happened. Prices went down. But as soon as it got here at this stage, you can see first bottom, second bottom. This is called a double bottom. When I said you see a double bottom, immediately buy, don't wait. But you have to wait for the third candle. First candle, second candle, third candle. And the third candle, you see inverted hammer. You know hammer, right? It's T-shape, but this is inverted hammer, indicating there is a least bullish power, but still there is bullish power, but there's least. So you don't enter trade here. The next candle you see is fully green. This indicates you have a bullish power. So you gotta have to buy here. This stage you buy, and the next form, start form, is doji. This plus sign, or the candles closing in nothing, these are called plus sign. Now one more thing, this candle, this single line candle, this is called invalid candle. And when this candle forms, the previous structures carries no value for the coming price. If you would have entered short here on this pattern based, you must have closed your trade here. Why? Because it's invalid candle. It indicates that your previous candles carry no meaning, no value for the next coming candles. This is a 4-hour chart. It's a very big chart. At this stage the price is 116. At this stage price is 115.89 approximately. So if you carry forward, you can see these red bars after the invalid candle is formed. But this candle is a normal hammer. This is showing bearish momentum. downside still prevails. You can see it went down till here. The next candle is also down, but they all closed at almost 3/4 price of the candle, forming a double bottom. When a double bottom forms, it's a clear buy. You buy this pair right here, and you would have easily set your take profit 1 at this stage, take profit 2 at this stage, and take profit 3 at this stage. But I would have closed my trade here, because if you zoom out a bit, this is the trend line we made. Our trade would have been exited here. Why? Because it would have been possible prices touch here, then reverse back till here, but it broke above, and this formed a full power bullish candle. No empty space in the candle, no wicks formed, so people would have bought here. This is an indication for an upcoming major event to go long. At this stage, the market's already decided the price or the action they're gonna make when the result comes out to be positive. You can see one candle here, you can see other candle here. This line below is called trend line bottom for this prices. This line is called trend line top for these prices. Now trend line top and trend line bottom, you call them resistance and support. These are basically slant lines, so that's why they're trend line. We will make some resistance in a few times. For example, look at this. Prices open later. You can clearly see this. There is a lot of momentum. Sorry, I mean empty candles here. This is a double bottom, so you have to buy here. Okay, people would have bought here and they would have got big, beautiful profit. But here it's a support. So let's make a line. This time the line will be horizontal, no slant, nothing. The support comes here. We will check there on bar chart. Correct? Yeah, you can see it's correct. Sorry, line chart. If you focus, this candle touch here couldn't break. This candle touch here could not break this support. This candle touch here could not break this support. Line below the prices is called support. Line above the prices is called resistance. It touches the support 3 times. 2 times when it touches, you buy. You don't wait for any further signal except the third candle. But wait, you see these 2 candles? You see the third candle in green, you see the fourth candle, it's inverted candle. What does this mean? These 3 previous candle doesn't carry any meaning, have no value for upcoming future. So I would have exited my trade here based on this inverted candle, because double bottom doesn't care for this. I would have exited my trade, but on the red, this candle next, it formed it didn't manage to cross the support line. It gone below the support line but came back up and closed there at this stage. The next bar is a bullish bar. Now remember one thing, this pattern is an opposite pattern of this pattern. At this stage, you look, the first bar is green, the second bar is red. Here the first bar is red, the second bar is green. When the first bar is green and second bar is red, it's showing sell. It's a bearish momentum. When the first bar is red and the second bar is green, I sent a picture on WhatsApp of the candle, right? Yeah, better, you should revise that. It's indicating a buy, and buy where? At the bottom of the support. At this stage, the RSI is an indicator, relative strength index. I'm not gonna teach you what is indicator right now. We'll learn that in upcoming future classes, inshallah. But this stage, it formed this sort of pattern, so it's a buy, and you were bought here based on this invalid candle. You don't care because of the previous pattern, but on this you would have bought and you would have earned a nice profit. This profit is approximately 300 pips. Sorry, 200 pips. Yeah, 121 minus 119, 200 pips. That's right. If you go ahead here, so my first take profit of this buy position would have been here. Why? because you can see there is a resistance. Now I'm using the word resistance. Where? Here. Why? Because the price line above the price is a resistance, line below the price is called support. So at this stage my take profit 1 will be here at this point. After it crosses this point here, I'm gonna bring my stop loss. My stop loss would have been here, the previous low. I will bring my stop loss to this price at enter price, so I don't get any loss. And when my trade reached here, I would have brought my stop loss till here at this stage. That means even if the price is reversed, I would have made some small profit. It's still profit. But here the pattern is a bit different. You see this plus sign, it's called the doji. D-O-J-I. Doji star. First green candle, and here we have one invalid candle, so the previous candle doesn't care at all. We see a green candle and a doji star. Then the next bar is a red bar. But this is very minor bars, like very less momentum in these bar. Few, you can say, not too much power. Still, when you see the first green bar, then a doji, then a down candle, it's indicating the next 3 bars or next 4 bars are going to be red, and you can see the next 3 bars are red. But the 4th bar, extremely bullish bar, fully green, and I would have bought here. Why? Because the full bullish candle occurred at a support. Yes, this was a resistance. This line was a resistance for this price, but this line is a support for this price. And you can see the prices bounced back up very strongly from this line, indicating there is a lot of bullish momentum yet to be completed. So people would have entered long at this stage when the candle closed. Remember, candle might be up till here, but you don't enter long until it closed. It is possible that it go below the support line and close. Now, if you even didn't enter till here, maybe you saw just a minor pullback. You see the next candle is also bullish, but here is the resistance. Let's draw that. Here you can see is the resistance. This is the resistance, okay? This stage is a resistance. I'll extend the line. Yeah. We bought here. It touched the line and reversed back a little bit, forming a small wick. And here also it formed the high. Here also it touched the high. It didn't form a new high. Remember that. So this stage, we would have been thinking, we could sell here. And the next bar you see is a red bar. It indicates it's a sell momentum, but you don't want to sell here. Why? Because you're not sure whether to go long or to go short, so you don't trade. You would have closed your trade at this point. You can see it's a green, then it's a red. When this pattern develops, the next pattern is obviously gonna go down till here, but no, the next candle form is green, the third candle form is a doji star, but this green and red candle, leave the first, focus on the red and green. It's a double bottom. This and this candle is a double bottom, indicating buy this pair right now, and you would have bought here. But I wouldn't have bought here because I would let the price break above this resistance. When the price is broke above this resistance, I would have went long. And before going up, we see many dojis form. For example, this doji is an evening doji. This indicates it's a sell. But the last candle which broke the resistance, this small one, is a green candle, and it broke and closed. The second candle also broke and closed. The third candle also closed in a lot of bullish power. I would have entered my trade here, but the next candle I get is an invalid candle. I close my trade here immediately, because the next candle you see would have brought my trade down to 50 pips loss approximately. But here again a resistance was formed, support was formed, so the price is rejected and indicates there's a lot of bullish momentum, so the prices went up. That's why. Continue ahead. Now here again the market got some event on news. That's why it formed a higher high. You can see there's a lot of wicks forming here, a lot of huge wicks. For example, look here, it's a double bottom. You gotta buy here. For example, look here, don't go away. Look here, it's a double bottom, it's buy. And again you get the confirmation a few times later, double bottom, buy. But the distance from here till here is approximately 40 to 50 pips. That's why you gotta set your stop loss approximately 100 pips away. If I would have entered my trade here, my stop loss would have been around here somewhere, because I want the market to run, and even if it makes low, I'll give it time to recover. If your stop loss is just 50 pips or 40 pips, you're not gonna make anything. And some people, their stop loss is only 10 pips, so I would expect them to make profit. You cannot. Here is an interesting scenario. This is the high, this is the second high, this is the third high. It's formed a resistance. Let's draw the line again. This is the resistance line. At this stage, you can see the first attempt made by the prices to break above, couldn't break. You see the second attempt, it didn't break, and the third attempt also didn't break. But if we extend this line, you can see the prices successfully break here, and they continue to a new higher high. And now look at this stage, this candle. I want you to focus on this. You see a double bottom as well, and as well as you see a double top. It is this downside wicks are indicating it's a buy. These upside wicks are indicating it's a sell. What to do here? And if you look at the pattern, first one is green, second one is red. This means prices will go down. But the first green is smaller in size compared to the first red. So it means it's an inverse pattern of the down pattern. So it's indicating going up. But here double bottom, but here double top, and here green and red, so going down. This stage, don't trade. That's simple. At this stage, you should not trade. When you see these confusing candles, they are called confusing in my language, you don't trade them. You leave the market and let it run. But the next candle you see is red. Now this is very important. You see, you don't trade on these two third candle also. The fourth candle you see close in red. So you gotta enter your short once this trend line is broken, and it broke here at this stage. So we're gonna enter here our short. We entered our short, we successfully came down till here. And if you focus, we have got a big support. Let's change it to bar chart. Our support line would be around you can say at this stage, yeah, this would be our support line. Let's change back, yeah, and let me zoom in. We entered short when this trend line is broken, and you can see we made a very big profit of approximately 40 pips. We would be running in profit at this point. The next candle you get is a bullish candle, and it reversed from where? It reversed from this until this, and you would have not closed your trade here. Why? Because you see the price is reversing from the trend line, support line, indicating buying power, but also forming highs but coming down below and close, indicating this upside shows selling power, this downside shows buying power. There was enough buying power, so the prices move up. They moved up still here. There was so much selling power, the prices came down below. And the next star formed is a doji, and the first candle bar is green, the second is doji, and the third is red. and they both are fully closed. Then these three bars together are called evening doji, and it's confirmed that the next candle is gonna be a red candle. If the first bar is green, the second bar is doji, and the third bar is a red, fully closed. Remember, fully closed. If double bottom is formed, it might be a buy signal, but these prices were fully closed, so you would have entered short here. I would have let my trade continue here, and you can see this is a double top. This is a double top indicating another sell. This closed in full indicating another sell. You get two sell confirmations, you simply sell them. But we would have not sold here, we already sold here, so we would have let our trade continue, and it would have made lowest low of 122.744, but we would have closed and the price is reached here. Now at this stage you see this long candle wick downside and closed in a bit half of the profit. This stage, this price is called, this candle is called exhaustion candle. Exhaustion fire, you know, it's called exhaustion candle. It means this downtrend has become exhausted and now it needs to rest. When you see the wick is longer, listen, the wick is longer but not more than 3/4 of the candle. That means almost 2/3 of the candle, sorry, 1/3 of the candle is covered and 2/3 is open. When you see this sort of candles, but they should be long, like this is not a exhaustion candle, it's a hammer, it's a hammer. Okay, this is indicating too much buying power. Too much buying power. We would have closed our trade here, definitely. And the next candle you get again is what is a green bar, and it broke the resistance because here this was a support, this line was a support for this prices, but at this stage this is a resistance for these prices. And if you focus this trend, the first one is red, the second one is green. Here a long wick, here a long wick. You know, it's looking like hammer, inverted hammer. Hammer and inverted hammer form. The next candle is gonna form will be buy. The first one red, the second one green, it's a buy. The first one green is small, the second one red big, it's a sell. Sorry, 1 minute, let me check again. Yeah, the first one green if it's big, and the second one red if it's red. This is indicating it's selling power. But in this scenario where we are, the prices are reversed. We are here. We would have closed here, and I would have let the market run properly. We would have not entered a trade here, and the market continued till here, when it came down again and formed a double bottom. Let's extend this line, form a double bottom below the support, double bottom, successfully broke the resistance, would have definitely ended long when this third bar closed and the second bar opened, so this price would have gone long. And you can see the next three candles formed were 1, 2, 3, all of them, you know, no momentum of buying power, but it went up. Then two dojis formed, it's red, and the prices came down till here. This is not a double bottom, by the way. Double bottom occurs when the prices of the first one and the price of the second one candles are approximately at same level. This is not the same level. This closing price, the starting price of this candle, but here the closing price of this candle is the starting price of this candle, but the closing price of this candle is also the starting price of this red candle. That's the thing you need to focus. This here is a double bottom. Why? Because you can see the momentum went up and came down. Sorry, I'm talking about this, not this. This and this candle, this and this candle. It's indicating a double buy, double bottom, it's a buy. you can see the open price of this is the open price of this candle. Closing price is also the closing price of this candle. Same candles, the length of the wicks is almost same, and the prices went up and boom, formed a invalid candle. This is not exhaustion candle. Why? Because the candle is not covered enough with the thickness, the fatness is not covered enough. The candle is not fat enough, to trade the next few bars. So we were not traded here. I don't like to trade in this situation. Here the market is really messy, but this messy market gave us some new thing. Then that's called a trend line. We will be drawing from here till here. Let's check on the chart it's correct or not. Nope, this is correct. And now the prices touched and formed a double bottom. Look at this. 99% of people were bought here because this is a major support, not a small support. And the prices went up by approximately 200 pips. Boom, that's a very nice profit. Your gold trade was only running in $2 loss, 2 pips or 3 pips loss, and your loss is negative $100. Just consider making 200 pips. Your account will be tripled. And now this formed again double bottom. Sorry, didn't form anything. The prices went high. Now this is a minor pullback. Whenever the prices makes new high, the price is gonna come down. There's a rule: buy low, sell high. Buy low, sell high. This is a new rule in trading, in nowadays trading. Here, if you focus, the markets have formed a double bottom, and we can expect the market to go high, but we would not enter trade here. Why? Because if you zoom out a bit, you can see the trend lines we made together. Okay, you can see them all, but wait, oh yes, we see another trend, and that trend is called, a big trend, a father trend, father of trends. It's from here till here. I'm gonna color this bar in blue so you get the clear view, and let's check whether it's correct or not. At this points, and the emplacement should be very careful, because you can see even a minute difference of pips is enough to bring your account to wiping out. If you focus, prices reversed from this trend line, indicating a sell option. We can enter short here. Why? Because you can see prices reversed here, went down so much. Prices reversed here, went down so much. Prices reversed here, going down so much. And if you focus on the trade bar, I've already signaled a sell trade on this, but I don't recommend you to enter a sell trade on this, because this is a very long-term trade. So you should not trade this type of pairs unless you want to trade long-term. You can invest very small amount and you can sell this. We'll go on a daily chart and check whether our trade will be worth or not. No, I don't think, because you can see the prices went up, and here the prices is forming a flag up. This is when the prices go up, and let me draw it for you. I will draw here. Okay, wait, I will draw on the screen for you. When prices go up like this, okay, and then they stall like this, what is happening here? Same thing is happening here. This is forming a flag whenever, and this is called a bullish flag because the prices went up. The next bars are obviously gonna go up, so it means this graph is gonna go up from here till here. It's a flag, it's a bullish flag. Prices start from here, the market is messy here, and the prices went up, boom. Okay, but in other scenario, for example, let's say you reversed it, prices came down, formed a little bit messy, and then boom, it's gonna go around. This is called a bearish flag, because the prices came down, formed a flag. This is a flag, okay, this is considered, this is a flag, and then the prices went down. Now how is this flag? You can see the prices gone up from here, they touch here, they touch here. If you join these lines, it's formed a flag. And wherever the flag form, for example, prices are here right now, okay, and I believe the prices is going to come down till here to touch the bottom of this flag. And once they touch the bottom of this flag, the next prices are going to break above this flag and continue upwards. But we have to reach the bottom of this flag yet. We cannot confirm we exited trade successfully or not. Okay, I'm gonna check. I'm gonna zoom in and check here. 1 minute. Yeah, we are going to extend this line, okay, like this, and we are going to extend this line here. Perfect. We're going to make another trend line here like this, okay, and let's make them like this. Just, I'm not drawing slantly, okay, because it will not look like a flag. Just for sake of understanding, I'm drawing it vertically. And the trend line, okay, let's delete some of them. Then we will be deleting this trend line. I don't know which is that. Who cares? Then wait, let me select again. Yeah, if you focus, we have got this line here. Yeah, there you go. You can see a flag formed. Let's delete the inner line so you don't get confused. Let's delete not this line, okay. You can see a flag is formed. Let's zoom out a bit. Yeah, you can see a flag is formed. This is a daily chart. One candle here is equal to 1 day. For example, look at the dates here. Dates are May and April 3rd, and this is the middle of April, and this is a flag. So the next movement we expect is gonna be from here till here, but it's gonna touch the bottom of this line. It's gonna touch the bottom, and once it reaches there, we can expect it to form a profit zone. This profit zone will put it green. You can expect the prices to reach here, but once it touches the bottom of this, so we will be swing trading. Swing trading means trading with pattern, trading with the charts. So we'll be entering short here, and our take profit, the maximum take profit, will be this line. It cannot break below this line. It's a bullish flag. Let's extend this line. It's a clear flag. I'll delete this line so you only get the picture of the flag. Let's delete this also. You can see it's a clear flag. It's formed a flag. It will go up. This is a bullish flag. The prices will definitely go up, but they are here. They're gonna come here. Why? This is a major trend line. Okay, and now switch back to our normal 4 hours chart. On the 4 hours chart, you can see first, second, and third touch. The third touch, wait, the prices have changed. Yeah, the price is already reversed in the market, and here we can sell, enter the short, and our take profit would be here. If you want, you can try this trade in demo. You can enter short at this price, and your take profit would be 123.20 will be your take profit. And now you can expect the prices to reach till here, but it will take a time. It can take even 1 week. So, and your stop loss, where should your stop loss be? It's a good question, you know. If the prices break above, they're gonna reach this level. That's a guarantee. So your stop loss should be a previous higher high. Our previous higher high is at this stage. We'll draw a horizontal line for that. This is our previous high. Our stop loss will be 125.77. Will be our stop loss, but I'm not gonna set up this much. This will be our stop loss. 125.50 is gonna be our stop loss. That is approximately 150 pips stop loss, and our take profit will be 122 120 one no what the price is gonna be here. 1 second, let's draw the line. I'm gonna check the take profit. Our trade profit is gonna be 123.20. That's also two approximately, you can say 100 pips will be our profit. And you can see there's a lot of line. So this was small class about price action. I hope you understood this class. You have any questions you can ask right now? Any questions about the pattern, the ideas? We have streamed for 47 minutes approximately. So you have any questions? Type in the chat. I will take that as a no. Okay, this is the end, and I hope you understood this class. If you got any problem, any doubts, you can contact me on WhatsApp. You have my number. And this was the price action classes completed. Thank you for watching.